Now, shifting attention to our neighboring country, Namibia's Finance Minister Lipumbu Shimi recently delivered the nation's mid-year budget review statement. Persistent drought necessitated additional provisions, but on the bright side, revenue collections are looking up while total debt is easing. The Finance Ministry expects growth of 3.6% this year, outpacing the Bank of Namibia's projection of 3.1%. Ridle Markus, SSA macroeconomist at Absa CIB, joins us with his assessment of the budget review statement. Thank you so much for your time, Ridle. Now, the metrics in this budget are better than the numbers we saw in last year's budget. Is this testament to fiscal discipline?
Yeah, I mean, I think it's also a little bit of poor performance from the finance ministry, especially the under-execution of the development budget. And that is typically used by many, governments to, especially when they have pressures on the recurrent spending, they try to, contain spending on the capital budget, which is slightly easier at times. So I do think, yes, there was important progress made even last year, reducing the deficit from over 5% to just short of 2.5%. And even this year's, the current fiscal year's deficit target of just over 3% or 3.2%, I think, reflects that under execution. Of course, that over the long term, that does have some negative spillover in that you're not actually, building the bridges or fixing the roads, etc., as you need to. So there's some efficiency concerns there, but at the same time, having a low single-digit budget deficit in this day of age is actually quite welcoming.
Yeah, it's quite interesting, Ridle, because I mean, we talk about the improvement in the fiscal metrics, but also you talk about the fact that there's underspending on the development budget, which could have longer term implications for growth. So we'll definitely be keeping an eye on that. But talking about spending, of course, extra provisions have been made for the alleviation of the implications of the drought. How much room has the finance minister made for this?
Well, it was not too clear how much money exactly went into it, but he did mention the fact that they had to realign the budget. Keep in mind that those kind of support comes through various sort of categories. So, to put a specific amount to it is always going to be a little bit tricky, given how that money is allocated over various departments for this. However, given that, it's quite a severe drought, it is safe to say that the fact that the country is looking at a slightly higher deficit this year compared to last year, there's obviously a cost there. Of course, that's not the only pressures, especially on the spending side, that might be a pressure, but, Namibia is struggling with some revenue side pressures at this point as well. And I think the Finance Minister Shimi did highlight some of the revenue concerns that they do have that could potentially threaten the budget over the longer term, including, of course, the South African Customs Union revenues, or transfers, SACU transfers, as is popularly known. And then, of course, on the mining side, they do have some concerns, especially around diamonds, but even uranium demand has started to level off. So it does highlight some of those revenue concerns in his budget.
Yeah, also another thing that's really going to be important to look out for, considering the fact that the revenues did outpace expectations, but also really looking at those risks that could maybe stop that momentum. How are things looking on the debt front, Ridle?
I think they've made important progress on the debt side. I mean, reducing the debt ratio from over 67% to 65% at the end of March 2024, and they're hoping to reduce that even further in coming years. And I think that's probably a reflection of the smaller fiscal deficit that they've had in the previous fiscal year, but also the fact that they've been growing at fairly solid growth rates in recent years. So there's been some progress. The importance here is, of course, how they're going to manage the debt servicing cost. They have highlighted that debt is rising. And hence, there is a need to continue this very tight fiscal budget or fiscal discipline and maintain the prudence. They did indicate, of course, that they will continue to run a deficit of around 3.5% of GDP, reduce the debt to GDP ratio below 60%. So they've got some very ambitious targets there. Of course, my one concern here is centered around the ambitious growth targets for next year, for example, saying that growth is going to come in at 5.4%, when even the central bank says it's most likely going to be 3.9%, which is more or less in line with our expectations. So, there's that risk that they might not get the necessary revenues next year as they have anticipated. We've also seen that on the South African side, our own finance minister has cut the SACU transfers from 2025 to 2026 and the subsequent year as well. So they will be getting less SACU transfers. So that's just going to make it slightly more difficult to reach those fairly ambitious debt to GDP ratio and also, the fiscal deficit targets that they've set for themselves, although not impossible. But in a world where there's so many moving parts, from geopolitical concerns to adverse weather conditions, and the country itself is experiencing a severe drought, it just, these targets always seem a little bit ambitious, though not impossible to do, especially if you continue to underperform on the development budget as they have.
Not impossible, but clearly there are drivers that the minister is holding on to here in terms of how they could reach those targets. Has that been clear on any point? What's driving his optimism more than what other institutions have projected?
So that's a very tricky question. Look, my experience has shown that some governments, or many governments, tend to be slightly more upbeat in the market, perhaps, in their growth expectations, and that there is obviously that downside risk to their growth projections. So, in a right environment, I do think that, despite the fact that growth could potentially come in well below 5.5% next year, that they could still meet these targets. But that would also mean that your commodity cycle needs to remain fairly, strong. It means that SACU revenues shouldn't be cut too much. It also means that, your revenues that you get from other sources of tax and your expenditure constraints remain in place. So, you can manage, but they are running a tight budget in Namibia, and that could potentially be a constraint with some slippage risk for them.
All right. Well, thank you so much for your time and giving us insight there, Ridle. Much appreciated. That was Absa CIB's SSA macroeconomist, Ridle Markus.